Well, thanks for taking the time, Phil. First question I wanted to ask was about the housing report you put together in October with BIS Shrapnel. I think it came out around October time. It brought up a number of different things that are happening in the market, the foreign investor angle, what's happening with investment property, and obviously affordability as well. It's been a little bit of time since that report was released, but maybe tell us about some of the things that were in there and if we're still seeing those things play out in the market at the moment.
Certainly, thanks James. So the Housing Outlook, yes, it was released back in October, and it is a report that we work on with BIS Shrapnel, and it forecasts house prices across the major capital cities. In the last few years we've tried to explore some other areas as well. So in prior years we looked at the difference between houses and units, as well as some of the regional cities. And you're quite right, this year we actually had a look at foreign investment and also what's been happening in some of the mining towns. So overall, the first thing we have a look at is the economy. Now, the economy has grown quite nice. GDP growth went up from 2.2 to 2.9% in this year. And that was largely driven by resource exports, but also interestingly, 0.5 of that 2.9% was actually driven by residential construction growth. And perhaps we can talk about that a bit more, but generally that saw the economy grow quite nicely, although there's certainly signs of some weakness. So even though unemployment levels well below 6%, consumer confidence doesn't seem to be quite translating into spending. We're also seeing business confidence isn't growing either, and that most businesses are still looking really at cost containment measures more than probably investing in long-term growth. Overall, that sort of means that we expect GDP and inflation to stay within the RBA's limits, probably at the lower end. And interestingly, when the report was published 2 months ago, we were expecting to see some more interest rate cuts. I think now with what we've seen with the US elections, we're certainly, consensus is saying that probably interest rates may well be on the up. We're hearing rumours around some of the fixed rates moving upwards. And that does change the picture a little bit, obviously puts a little bit more cost into people paying their mortgages. But from a mortgage insurance perspective, we're not actually expecting to see those interest rate hikes be significant and therefore shouldn't really impact default or arrears rates within the market to any material level. Overall, we see the economy is weak but relatively benign, and as long as interest rates stay roughly where they are, and unemployment stays low, overall we think that the economy will not be a major driver of house prices either way. So the next part the report looks at really is the supply and demand. So on the demand side, this is really driven by population growth and population movements. The net overseas migration is probably the biggest driver here, and we saw record levels of inwards migration to support all the mining boom. So probably 2012, 2013, saw some of the highest levels of inwards migration that we've seen in the last few decades. Now, interestingly, most of those are on 457 visas. They tend to expire in a 5-year period. So we're actually expecting over the coming 2 or 3 years to see net overseas migration actually reduce significantly. So I think we were seeing record levels of around 220,000 net inward migration over the last 8 years. We're actually forecasting that to be record lows at around 140,000. So when you put that on top of the natural growth of the population through obviously the births offset by the deaths, we're expecting to see the growth of the population reduce from about 1.6% down to about 1.2%. Now that's still really healthy, right? So overall globally, Australia is doing still very well at growing its population. And the question, who are the winners and losers when you come to a state level? So we're just seeing a lot of that overseas migration, as well as some interstate migration having gone to the west and to Queensland, certainly during those boom resource years. We're certainly expecting to see that reverse somewhat. And typically a lot of the net overseas migration would come into our Sydney, Melbourne cities, and then they would move out to some of the other state capitals. We're expecting to see that those people not move on quite as much. So Sydney, Melbourne should be a beneficiary in terms of population growth, and we're certainly seeing population growth declining somewhat within the WA and Queensland states. So overall, demand for housing is still going to remain pretty strong, growing economy and a growing population. So then we have a look at the supply side. Now, I think this is quite fascinating. Again, Australian market is certainly not one that is homogenous and consistent and running at the same pace in all state capitals. So we saw Perth, I think its commencements of construction has certainly peaked probably back in the 15-16 period, whereas Sydney, Melbourne, Brisbane are really just peaking as we speak. So one of the biggest changes is the constitution of how we're filling that dwelling. So Sydney has always had a high proportion of units that make up its dwelling construction. Overall, New South Wales is about 58%, but if you look at Sydney and the inner suburbs, over 70% of dwellings is made up of medium and high density units. The interesting factor of that is that they can take up to 2.5 years from commencement to actually coming online. So what we see is the commencements that have peaked in 2016 in Sydney, a lot of that stock won't actually hit the market until 17, 18, even as late as 2019. And we're always playing catch up, so we tend to only build once the demand for housing is super high and we have a significant deficiency of stock. So in those states, cities where we're satisfying demand through unit development, we're certainly starting to see a lot more volatility in that supply and demand equation.
I think that's one of the biggest stories, I guess, to come out of this year. 2016 and maybe a bit of 2015 has been that whole apartment issue. You know what I mean? It's all over the papers. Is there going to be an oversupply? Will prices come back? Where do you see things going with apartments?
Every market's different. So Melbourne is fascinating in terms of it used to build around 1/3 of its dwellings used to be units. It's now almost half. And again, in the inner city areas, and I think we've heard a lot about certainly the city CBD part of Melbourne, there is going to be an oversupply of units for sure. Brisbane's a little bit different. So Brisbane housing is certainly an undersupply, but the unit, again, development in Brisbane and surrounding suburbs has been going gangbusters. So Brisbane's a market where we see it almost completely different. We're expecting house prices to go up in value, and the demand for those is still outstripping the supply of the number of freestanding houses. But units, we're expecting the prices to go down, and again, an oversupply of units compared to the demand. Again, I think some of this is synonymous with the fact of the latency between when we actually identify the need, get approval for commencements of these high and medium density developments, and then the time it takes to actually build and bring this stock online. However, the interesting thing as well is if you start taking a longer term view, high and medium density has to be part of the landscape of what we're building in terms of satisfying the population demand. So we have looked, the BizShrapnel report looks 3 years out, but I think if you start looking 15 years out, you get a very different picture. Australia's sitting at 24 million population. We're expecting it to go to over 30 million within the next 15 years, 6 million extra people. We're certainly not going to be able to satisfy that demand by building freestanding houses. And the old Australian dream of a freestanding house and a pool may be a thing of the past or something that's only available to the few. But certainly high and medium density is going to have to be on the cards. And we're also seeing a high demand for that. So I myself live in high density. A number of my colleagues have gone from freestanding houses and for lifestyle choice are choosing to move to the inner city or the inner city suburbs out of choice. So it is interesting. First home buyers are going there, and you may have seen our LMI policy changed with respect to high density so that we can support our customers, enabling first home buyers to buy into unit developments. But it's also at the downgraders as well at the other end of the spectrum.